EBITDA, a little over 100 million US. Notwithstanding the reduction in grade, we've been able to increase mining and production plant throughputs.
And we haven't even touched upon, obviously, what could be a real company maker in Madagascar, but you're down around 14. You haven't been that low for about 4 years or so. You started making a recovery, it fell sharply. Do you know what's going on in the marketplace? Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, give us a thumbs up and do leave your comments below. Helps us understand the sorts of questions you'd like us to be asking, how you think we're doing, and of course what you think of the company. And you can also get this as a podcast, a transcript, and an article on cruxinvestor.com. And of course, for our Crux Club members, you get early access. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We spoke earlier today to Tim Carstens, who's the CEO of Base Resources. They're an ASX mineral sands company. They've got two assets, one in Kenya, Kwale, another in Madagascar, Toliara. Kwale has been throwing off a lot of cash for the business over the past few years, but it's coming to sort of end of life of mine. They do have some secondary lower grade projects which they're looking to expand and develop to continue that cash, but it probably won't be on the same basis that they have been enjoying over the past few years. Toliara is where the money is at. Huge project, long life of mine, plus 50 years, exactly the same project, or it's replicating what they've been doing in Kenya. So could be quite exciting. Difficulty there being they're in negotiations with the Madagascar government over terms, I think things like royalty and taxes and so forth. I think the market is also flattening out in terms of pricing, which will cause some consternation. Lots of things discussed. He was very, very open and very honest. Do take a look in the description below at some of those topics. Anything interesting in particular, click the number. That's called a timestamp, and that'll jump you to that part of the video. Otherwise, enjoy what Tim has to say. Hi Tim, how are you doing, sir?
I'm very well, thank you very much.
Well, thanks for joining us from your Perth office, it looks like.
It's actually nice being in the Perth office as opposed to sitting on aeroplanes and feeling like you live your life in the business class lounge at Dubai Airport.
Yeah, it'll be a new world when we all get back to normal, a new way of working. Well, look, Tim, why don't we kick off with that 1 minute overview of the business, and then we'll pick it up from there.
Yeah, I guess the fundamentals of our business is we're a mineral sands company. We built our first mine, the Kwale operation, commissioned that in 2013, and it's been an extremely successful mineral development. In 2018, we took the big step of acquiring, I guess, the next iteration of Base in the Toliara project in Madagascar. It's given us a really strong growth path for us to apply our pretty well-honed business model to. And we've been busily progressing that through the study phase. Got our definitive feasibility study out at the end of last year. And we've got a pretty clear plan from here on how we grow our business.
Right, okay, so we're in Kenya and we're in Madagascar there. And again, because there are quite a few new people to this, and mineral sands is, perhaps not as well known as the regular stuff. So you're talking about rutile, ilmenite, and zircon. So just explain what the uses are.
Yeah, okay. Ilmenite and rutile are just different forms of titanium dioxide, basically. Rutile being considerably higher grade. So in our world, rutile is 95.5% titanium dioxide, and ilmenite's in our case about 50% titanium dioxide. 95% of all of that produced in the world goes into the production of pigment that's used in papers, plastics, paints, you name it. The balance of it goes into things like titanium metal, but also it's used in the welding industry and for a few other applications. That represents about 75% of our revenue, those two products at Kwale. The other 25% roughly is zircon, the majority of which is used in the ceramics industry, as an opacifier in tiles and bathroomware and that sort of thing.
Okay. So let's start with Kenya, Kwale, okay? Because that was the first project. You've been running that a while. It's generating cash. The business seems to be running quite smoothly. We talked last time about safety records and mainly because it's a very simple process in a way. We're not sort of going deep down underground. Can you sort of explain the process to people so they get a feel of what type of operation it is?
I mean, the mining process is simple. As my technical guys tell me, the processing is as much art as science. It's relatively complex. That's where the magic happens. I mean, from a mining perspective, at Kwale, we use what's called hydro mining. So basically, a series of big water cannons just blasting the face with water, creating slurry that gets collected through channels in the bottom of the pit and to a sump and then pumped up to the plant. And then we go through basically three processes. The first is to remove the slime fraction, the clay from the sand, then goes through a conventional gravity concentration process using large banks of spirals to produce a heavy mineral concentrate, and then that goes into the mineral separation plant to produce the three finished products of ilmenite, rutile and zircon. That's it. It's a relatively simple process. There are no chemicals added other than a bit of flocculant to help settle the clay. Beyond that, it's purely physical separation, which makes it a really benign sort of environmental process and particularly good for bringing a mining operation to an environmentally sensitive place like Madagascar. It's certainly a good place to start.
Absolutely. So, and there is a kind of process I want to go through. So let's talk about the numbers that are coming out of Kwale. Why people were encouraged when you started talking about a second project. So run through the basic numbers on Kwale for us.
Well, I mean, one of the reasons we liked the project in the first place was it has a very high revenue to cash cost ratio, which is the way you typically compare mineral sand projects. When we're in the central dune, which was our higher grade dune that we finished midway through last year, our RC ratio was up around 2.8. It's now that we're in the lower grade south dune, we're down around 2.3, 2.4. Still places it at the top of the pile, if you like, in terms of global competitors. Just to put that in context, Toliara, we're expecting to be above 3. That's one of the real features of that project that we like. So high revenue to cash cost ratio was one of the attractants. The other was Kwale generates a lot of cash. Our EBITDA this year will be around a little over 100 million US. It's been at that level for the last couple of years. Notwithstanding the reduction in grade, we've been able to increase mining and production plant throughputs so that we've been able to maintain a similar sort of cash generation. So very significant cash engine for our business. I guess the biggest weakness of Kwale was its mine life. When we started, it had a mine life of 11 years, and that will take us through to around 2023, end of 2023, which again, putting that in context, one of the reasons we like Toliara is just on the basis of what's in the measured and indicated category in the resource at the moment. That's a 33-year mine life, and that's based on only half of the current resource, which we're about to expand. So you can see that that asset's going to be a 75-100-year type mine life operation, totally different. High revenue to cash cost ratio and even higher cash generation. We're looking at something around based on the DFS, around the mid 130 million a year free cash flow.
And we'll come on to that. I just want to sort of finish off, the plan at Kwale. Obviously, you talked about the short mine of life of mine there, slightly lower grade stuff that you're going through at the moment. I mean, and it has thrown off a lot of cash. It's definitely done that for you, and I guess you've learned a thing or two along the way as well. But what happens when can you extend that? Are you looking in Kenya for additional resource where you're able to extend the operations there, or are you going to migrate everything over to Madagascar? I mean, what's the plan?
We definitely have a plan to extend Kwale. I've been working on that over the last number of years. As I said, the South Dune, where we're mining now, that will finish up around the end of 2023. We're completing a pre-feasibility study at the moment for our third dune, called the North Dune. which is bigger again. It's about another 170 million tonnes, but quite low grade. So it's about 1.5% heavy mineral on average. The South Dune where we're mining at the moment is about 3.5%. So much lower grade. So we're doing a pre-feasibility study on that to look at how a subset of that would look as the very tail end of the mining operation. It'll definitely be much lower cash generation than we enjoy now, but could quite conceivably give us a nice tail that's worth having, or at least extend the operation while we unwrap some of the other opportunities in Kenya we see for some higher grade material. So there's two what we call priority one targets adjacent to the current operation that we're working our way through the land access requirements to be able to start drilling there. So we're reasonably optimistic that we'll be able to get a drill rig turning over the course of 2020, subject to COVID restrictions and what have you. But that's where we see sort of the higher grade opportunity that we would bring in ahead of the North Dune if possible, and if not, we would swap from the North Dune to one of these areas if they proved to be really attractive.
Okay, so you intend to keep investing in East Africa. In fact, last time we talked about the difference between East Africa versus West Africa, and I think shortly after our conversation in whenever it was October, I think someone submitted an article with regards to doing business in West Africa with the kind of terrorist activity with some of those gold mines. I think so. It was a point well made at the time. Do you continue to enjoy a good relationship with the Kenyan government? I mean, you're one of the largest mines in Kenya. Are they encouraging you to stay? I mean, and if so, what do those conversations look like?
Yeah, absolutely. I mean, we're 65 to 70% of the Kenyan mining industry. We're the single biggest exporter in the country. So we're reasonably significant to Kenya. We're officially anointed as one of their Vision 2030 flagship operations, so quite high profile. To give you some idea of the alignment we have with government, the Principal Secretary to the Ministry of Mining has as one of his KPIs the extension of Kwale mine life. So, we do have a high degree of alignment on that. They recognise the need if they're going to have a mining industry to see Kwale continue. And we enjoy that sort of relationship as a consequence.
Because you've invested a lot of money in terms of your giving back to the community. I know you said that CSR is a banned phrase. It's sort of a community partnership, if you will, and also with the government. And I understand why you'd want to do that in regards to getting endorsement if you do move to another jurisdiction. But are you seeing a sort of change in the way that the African governments are interacting with companies? Because again, we've seen various states try and renegotiate position, renegotiate royalties, taxes, corporate or otherwise. Is that any of those types of noises being made in Kenya?
Yeah, look, I mean, we've certainly been having a discussion with the government about increasing the royalty rate from that's locked down in our investment agreement. The royalty rate applying to our project is 2.5%, which is low by global standards these days. South Africa, Australia, the mineral sand royalties are around 5%. So we've certainly been having those discussions, but at the same time, you've got a government that's been quite disciplined in abiding by the investment agreement that we struck on which the development took place. So Kenya does have good respect for the rule of law in that respect, albeit have a completely legitimate desire to try and get the maximum return they can out of the mining industry. But they do also understand that if you play hard with your existing miners, then it causes anyone else looking to come in to think twice, and you devalue the government's paper quite quickly. So there's a good understanding of that dynamic in Kenya. Okay.
And obviously COVID-19, we can't have a conversation about mining without talking about COVID-19 and its impact on the business. What's been happening in Kenya? How are they controlling it? How are you controlling it? What measures are you taking, or have you taken?
Yeah, well, I'm certainly looking at our sort of our approach. What we did immediately was reduce the number of people on site. So any functions that could be undertaken off-site were taken off-site. And we reduced the number of people on site by about 32% to just minimise our risk, and then implemented all of the usual measures to or to minimise transmission in terms of testing and bus protocols. Changed operating arrangements to keep people apart. Fairly stock standard stuff now. And then we've worked very closely with the government to be able to fit around their various measures as they brought them in, so that we've been able to maintain operations. So when they introduced a curfew, we had to modify our shift rosters to fit within that. There were some cross-border, county border restrictions put in place, and we had to work with the government to work out how we were going to continue to operate in that world. And it's all been seamless, to be honest. We haven't had any interruption to production. And I guess the biggest thing we watch for is we will continue to operate while it is sensible for us to do so, and we enjoy the support of our employees and our communities. So you can envisage your point could come where there's a sense that people gathering together to work at the Kwale operation is contributing to community risk. And that's the point at which we would probably say, look, it's time that we threw that in the operation into neutral. But we're nowhere near that. The number of cases in Kwale County is in the 30s. We haven't had any employee test positive, or indeed their families. So at the moment, we're not seeing that sort of risk emerging, and everyone seems quite comfortable if we continue to do what we're doing. I have to say the way Kenya has gone about managing this has been pretty impressive, given the limited resources it has. They've been pretty clear-eyed in the way they've gone about it. They haven't gone to follow a flatten the curve strategy that makes sense in other countries, but doesn't in a country where the health system, there's almost no way of flattening the curve to a point where it can fit in the health system. They've had to be a bit more nuanced in it. And it's been relatively successful. I mean, yes, they have 2,500 active cases, but they've got a pretty well controlled. One of the things that's interesting though is we're not seeing as many people in Kenya develop, or the proportion of people develop the more severe symptoms or cases. And one of the theories, there are two kind of theories to it. One is that the sort of battery of inoculations that people routinely get in Kenya for things like tuberculosis and the like actually has some efficacy in either preventing you catching COVID, or at least deteriorating to some of the worst sort of symptoms. So we're not seeing the deaths, we're not seeing the hospital system being overwhelmed by people needing ventilation. We're not seeing any of that. It's been quite interesting, quite a different dynamic from the UK or the US for that matter.
Okay. Well, that's good news. I mean, that's fantastic news. You want to hear stories like that. But you Aussie boys are doing quite well on that front as well, aren't you? I want to talk about learnings. Okay, what have you learned? Okay, so when we spoke in October, you're up there. You were 30 cents. You're down around 14. You haven't been that low for about 4 years or so. And I want to try and understand why. Okay, because you've clearly got a good business, and we haven't even touched upon obviously what could be a real company maker in Madagascar. But so you're at half the price you were in, say, October. Obviously, we've had a few big things happen. We've had a market reset just before COVID, and then we've had COVID, and everyone's experienced that kind of that dip, that trough. But in some sectors, we've seen an immediate, V-shaped recovery. Gold, in particular, silver, to a degree. You guys haven't seen that. What's going on in the background with your institutional shareholders? Are they seeing something that we need to be aware of, or is this just normal in the course of investment? People are going to offload every now and again, because you started making a recovery, it fell sharply. Do you know what's going on in the marketplace?
Yeah, I mean, you've got to have a look at, let's just talk about the structure of our register. The top 2 shareholders hold just short of 50%. The top 4 hold 70%. The top 20 hold 90-something%. And all of our major shareholders, with one exception, over the last 12 months have been, picking up stock as they go along. Our biggest 2 shareholders can't now, because they've kind of reached the limits under the regulatory sort of requirements in Australia. So their ability to continue to top up at the moment is limited. So our share price, to a certain extent, is set by the marginal high net worth kind of investor, the top 10%, if you like, of our register. Now, we did see our share price fall off a cliff. I think immediately before what you described as sort of the onset of COVID, we were sitting at about 26 cents. We did the big capital raising for Toliara back at the end of 2017, and that was done at 25.5. So we basically tracked sideways through to pre-COVID, and then COVID hit and we fell off a cliff. I guess tackling it in 2 parts, why has our share price not moved, reflecting the value we've been progressively unwrapping with Toliara, particularly getting the DFS out in December. One of the challenges with it has been, 1, Madagascar is a bit of an unknown quantity for people. 2, we've been quite clear that we have to answer 2 really key questions in the mind of the market for them to understand what Toliara is going to mean for the company. The first of those is locking down the fiscal terms that are going to apply to the project in terms of royalty rate and the stability regime. And the second is, how are you going to fund it? What does the funding look like? And while people have had the view that, look, there's a big capital raise coming to develop Toliara, it's pretty difficult to get people to move in buying the stock, because there's a material dimension that isn't understood. So we've been pretty clear about that, and we knew we just needed to be patient to get that out. And we're still in the middle of that process, and then COVID has slowed us down. The second issue has been, the sudden drop around COVID. And I guess if I look at the way we've been impacted specifically, it brought us down to 15 cents. Some of our peers haven't been affected in quite the same way. If you are valuing us just on the basis of Kwale cash flows, because you're not clear yet about what Toliara means, you're looking at Kwale as having 4 years, let's say, of mine life left. So if COVID is going to make a mess of the markets for the next 12, 18 months, let's say, that's going to have a disproportionately big impact on what you're valuing us on, if that's what you're doing, than on a company that might have a mine life of 50 years. So you can kind of see why you would have that effect. What people are missing, I think, in applying that logic is just how much cash Kwale actually generates. We're looking, as I said, this year will be another $100 million US year. The sort of production volumes we're seeing now are the sort of production volumes we're going to see over the remaining life of Kwale. So you simply cannot justify the current share price on the basis of Kwale cash flows. It just doesn't make sense. But we need to get people focused back on that.
Okay, so let's break down some of those things, because I think we need to just dig a little bit deeper. So you're in discussions with the Madagascan government over terms. They want to understand, they want better terms. So how are those conversations going? What are they asking for? What are you pushing back with?
Yeah, look, the discussions with us have effectively been overtaken by a broad-based revision to the mining code. And initially there was a fairly major misstep by the government late last year where, in the context of that revision to the mining code, they started talking about free carried interest, they started talking about 20% production sharing and this sort of stuff, which was, shall we say, not particularly well considered, and certainly remote from any expert advice on what that would do to the mining industry. Fortunately, post that, the World Bank and a number of other independent institutions provided advice to the government, and the feedback we're getting from government now is that they understand that a much more modest revision to the mining code makes sense. They're not talking about free carried interest or production sharing. Things like a 4% royalty rather than a 2% royalty is kind of where they see that moving. From our perspective, would a 4% royalty be fine? Absolutely. I mean, from 2% to 4%, it's about a $35 million NPV impact on a project with an NPV of $650 million. So it's kind of in the noise. So that's where that's tracking at the moment. We're being encouraged by government to lodge our application for what's called the Large Mine Investment Regime, which is the stability mechanism in Madagascar. So we're preparing that at the moment, and we look to get that into play with the government in the coming weeks. And I'm quite positive that we'll see a resolution to the fiscal terms and stability over the next quarter or two.
Okay, you talked about the market being affected for 12 to 18 months, okay? And I guess there's two components to that. One, the market's or your ability to get financing or attract financing in an environment like that. And two, people's perception of, I guess, consumer behavior, which will affect, your market, the pigment market, during that time. And I think there's lots of sectors which are, worried about that, EVs, battery markets especially. But what are you seeing happening during this 12 to 18 months? I mean, is it just, business as usual, we'll do what we can do and we'll let others worry about what's happening in the market? What do you do during this period? I'm kind of intrigued.
Well, we don't see a market scenario that would motivate us to reduce output. We don't see that. We do see price decline and price pressure. But the other thing you've got to sort of factor in here on the other side of the equation is, yes, demand has held up till now. We're expecting to see it drop off a little bit over the next quarter or two. But at the same time, there's been supply curtailment. So we've seen reduced supply out of India, we've seen reduced supply out of South Africa. So that's starting to, I won't say it's evened up the balance because it hasn't. There's been greater demand drop than supply drop, but it's a factor. So I guess having the conversation now, I wouldn't say that we are expecting the sort of impact that we might have been thinking was possible if we were having this conversation 2 months ago. I think, will we see price reduction? Yeah, we will, but it's not going to be, something that it's certainly not going to see a return to pricing that we saw back in 2016 when the world was awash with supply. Won't be down around those levels. We're seeing pretty level pricing as we're heading into Q3. So we'll see how that plays out, but we won't see significant reductions.
And what do you think that's going to do for competition, new entrants in the market? Because we've spoken to companies talking about it, but they're going to face the same sorts of issues, especially with single assets. So is that a good thing for you? I'm trying to work out whether it's a good thing for you that the market conditions are like they are and pricing is like you're suggesting.
We're in the same situation in the sense that, if I'm right and we're able to resolve the fiscal terms issue with government over the next quarter or two, that's actually not going to be the thing that stops us moving forward with Toliara. It's going to be, when can we get global travel happening again so we can get our people back in the country and, we can get the financing moving with site visits and all that sort of stuff. What sort of state are the financial markets going to be in next year? They're the things that are going to dictate how fast we can bring Toliara into production. And they're the things that apply to all the other projects that are trying to get into production. So the sort of conga line of projects we saw before COVID, they're all still there, and they've all been moved back. And in our view, Toliara still sits at the front of the queue, albeit the whole thing's been moved back a bit.
And so why did you draw down your full $75 million facility at that time? What was the thinking?
Yeah, look, I guess out of an abundance of caution. Now, for a number of reasons. I mean, one, we've got a really healthy cash balance, but you're sitting at the end of March, you think where the world was then, weren't entirely clear quite where this was going to go. One of the learnings from past crises is, he who has the most liquidity wins. So we wanted to ensure we had maximum flexibility. We didn't want to take the risk around the financial condition or preparedness to lend of our lenders. Don't want to suddenly discover you need it in October, and you discover that all of your lenders have been hit by every man his dog, and there's just no liquidity. So we just took a preemptive step to draw it down. It cost us about $500,000 a quarter net to carry that as surplus liquidity. We drew down for 6 months. We'll reassess the need for that when we get towards a sort of early September and decide whether it's, the same circumstances prevail.
Okay, and I read somewhere that I think that facility would have fallen to about 50 million this time next year. Like you say, take it while you can or get it while you can. So that was born out of caution, say, I want the ability to be liquid, rather than saying, oh, I've got another target lined up, because that was, again, something that we were talking about.
It was absolutely out of caution, just making sure we were in the best position we could be, heading into a storm of unknown ferocity and duration. Okay.
Is there any shorting going on with this? So given all of these components which you're trying to resolve, whether it be, Madagascar government, you've got, the share price doing what it's doing, the market may be 12 to 18 months in some kind of flux.
Yeah.
Are you experiencing shorting going on with the stock?
Not at all. I mean, in Australia, you have to report you're required to report short positions, and it's not a feature of our stock at all.
Okay. Can I just sort of understand, and this is sort of background stuff for me, it's like when you're selling into the market, how do you sell your product? I know just tell me, how do you make your money?
Look, we have a whole range of long-term offtake agreements with a panel of customers, and then we have a whole roster of ilmenite consumers that we just have do regular business with. They built our product into their blends, and they buy regularly from us. So something like 70% of our revenue is under contract, under long-term offtake agreement.
Right. Okay. Quite a nice number. Well, let's get into Madagascar proper, because obviously when we talked, we're getting the DFS done by the end of the year. You're entering conversations about funding, etc. I mean, so what has happened since, let's say, October, since we talked?
Well, we got the DFS out. That was released in December. It was pretty much smack on the PFS economics that we released in March. Same sort of capex. I think the capex was about $2 million, $2 or $4 million more, 440 odd million capex. NPV is 650 million, as I said before, RC ratio of 3, north of 3. So a really robust project. We talked about the discussions around fiscal terms and the need to lock that down, but we've been moving ahead with our financing, and I guess there are two key components to the external financing of the project. One of them is bringing together a project financing facility or a debt facility along the lines of what we did with Kwale, panel of banks. That's been progressing extremely well. The level of interest we've had has been high. We're at the point now where we're starting to appoint lenders to particular roles in the syndicate, as various different agencies and the like. Very strong degree of support from the development financial institutions, so the government-backed development institutions, which is fantastic, because their appetite is more driven by development agendas rather than impacted by commercial situations and balance sheets. So less likely to be impacted into next year, which is good. Looking at around a $350 million debt facility is the current thinking. And then running along beside that are some discussions around joint venture participation in the project, with a minority equity interest in the project. So pushing forward with both of those together. Both of those streams are continuing despite sort of COVID lockdowns. But we won't be able to crystallise those until we're able to move people around again, get people into country, do the various DD site visits and the like. So we're doing as much as we can remotely.
And what timeline are you aiming for to have all this in place?
Look, I mean, it's a $1 million question, and the biggest issue for us is, and in our most recent quarterly, we stepped away from our final investment decision timing that we were shooting for, which was the end of September this year, and we haven't announced another one simply because it's a function of how quickly the world bounces back to activity post-COVID, international travel being possible. State of the financial markets, all that sort of stuff. So right now, hard to know. We're just getting everything lined up as best we can, and then as soon as we've got some greater clarity on how those things are going to unwrap, we'll come out with a new target date.
Okay, and I guess it's hard without the agreement of the Madagascar government there. You mentioned a quarter or two, who knows? Yeah. Right, okay.
Exactly right.
Okay, so let's talk about your mindset. So in a bull market, one generally makes one set of decisions. In a bearish market, you make a different set of decisions. There's different degrees of confidence. So, how do you think has your decision making changed over the past few months? Seeing, because no one's seen anything like this. You used the word caution there in terms of drawing down money when you could. How else has it affected your decision making, this whole market?
I mean, if I look at our fundamental strategic plan, it should be independent of bull markets and bear markets, in the sense that it's meant to be we think about how do we generate fundamental value to the maximum extent and with the right risk profile over much longer cycles than that. It potentially impacts on the execution and the timing, but shouldn't directly impact on the plan. That said, we're actually this week having a board workshop that is considering our strategic plan in the context of the world we now see, with the level of resolution that we have. We live in a world at the moment that can best be described as volatile, uncertain, complex and ambiguous. And so in that environment, how does that change the way we think about strategy and the plan we're on? So we're actually doing some formal work in thinking about that. I guess the other thing it does is, particularly with a delay in we don't know how long the delay is, but we know it's delayed with the Kwale, with the Toliara project, and we know Kwale is continuing to generate significant cash flow. What opportunities in terms of capital management does that open up? That may not have been the case, may not have made the same sense if you were rolling, full steam ahead into Toliara development with an FID in September. If you take a view that it's out a year or so, what does that mean for capital management? So there's some of the thinking that's going on at the moment.
So, and a phrase that you used last time with me, you talked about getting full value in share price for the earnings, right? So obviously it is a different world. Are you going to have to think differently about the order in which you do things, where your focus is, where you spend your money or don't spend your money?
Yeah, well, look, we certainly need to think about how we allocate capital and what further risk money do you put into something like a Toliara development ahead of having certainty around its progression. Definitely need to think about that. Does the market we're in at the moment potentially throw up some interesting corporate opportunities? Hasn't as yet, but that's entirely plausible. So to be honest, in answer to your question, and it's not really an answer, I would say at the moment there is simply insufficient clarity to make any sort of hard jump decisions in any particular direction. The better thinking at the moment is, what are the trends that are emerging that we need to be alive to that could be triggers for a change or pathway at some point. So we're kind of distilling that at the moment.
Okay. And Bank of America recently ceased to become a significant shareholder. I think UBS have kind of stepped in. Did they talk to you when they do these things? Or, I mean, they don't have to, but do they bother to say, look, it's just not quite fitting our investment thesis at the moment? How's that work?
All of the trade amongst those institutions over the last 2 years is not real trade. It's stock being moved from one pocket to another under prime lending arrangements. So it's not real.
It's not real. I love it.
No, it's not. I mean, it's all just stock being managed under those sort of structures by another major shareholder.
Got it. Okay, fine. Understood. Well, look, Tim, thanks for the update. Obviously, tough times for everyone. You know, you're cracking on, which is good news. Can't wait to see. Well, hopefully, whether it be this quarter or next quarter or whenever you get yourself sorted out in Madagascar. Stay in touch. Let us know how you're getting on.
Excellent. Well, thanks. Good to chat.